So we are live, alhamdulillah. So inshallah we'll start officially. Bismillahirrahmanirrahim. I will start. Sorry, give me a second.
We should not forget to buy those stock. Yes.
Okay.
There's nothing you can check. I'm not sure if there's anything remaining. I don't think so. But we'll check it and then we can go when we check before we go. I think it should be.
Okay. Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuhu. President Saab, Vadilo, Mujabayu, Beno, ne, I'm not sure if Garbacha or President Enaj, but I hope I'm Marejana safe for you. Ne, inshallah, I'd like to welcome you all today to our tax webinar. Jida Panja esteemed panelists, Panke Pinjo expert opinion divenda regarding the Canadian taxation system. So before we get into our actual program for today, request karinde se Asya Nadeem Saliani ke pange Quran recitation sa the program start kari din inshallah.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam wa rahmatullahi wa barakatuh.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. القارية ما القارية وما أدراك ما القارية يوم يكون الناس كالفراش المبثوث وتكون الجبال كالإهن المنفوش فأما من ثقلت موازينه فهو في عيشة راضية وأما من خفت موازينه فأمه هاوية وما أدراك ما هي نار حامية صدق الله العظيم.
Jazakallah Asya, thank you very much for that beautiful Quran recitation. Inshallah, we'll get started with our program now. Before, as Shabir Uncle would say, your accountant, the accountant you choose may become your most valuable resource. And I've never heard truer words. Compliance for your taxes may be manageable, but your accountant plays a key role in helping you plan your finances to minimize on your taxes. With so many changes in our lives due to COVID-19 pandemic, your taxes weren't going to take a backseat. They had to change too. So here we are today trying to share as much wisdom as we have on all the changes COVID has brought to your tax filings for the year 2020. We hope that some of the advice our panelists are able to share with us today will give you more insight on how important it is to consult with your accountant and to reap the most benefits of your financial position. So I'm going to quickly introduce our panelists today. Our panelists for today are Shabir Baga, CPA, and he has a CGA, legacy CGA designation as well. Shabir Uncle has been managing his own practice for over 10 years, and his expertise in accounting and taxation, both personal and corporate, as well as management consultancy, make him a very respected professional in his field. Previously, Shabir Uncle has worked with several multinational companies in leading positions in accounting and finance, as well as He's been a Sarbanes-Oxley auditor. Shafi Yaqub, who is our second panelist, he is a CPA and he has his legacy CGA designation as well. He is also an FCCA. Shafi Uncle has been running his own practice and providing full service of accounting, taxation, and business consulting for over 30 years in the Durham region. He works with a network of professional firms providing business financing, real estate, retirement, planning, and related financial services. The next on the panelist, I don't like to blow my own trumpet, but just to give you a brief introduction of myself, my name is Zara Admani. I am a CPA, CA. I have about 10 years of experience in audit, tax, and financial advisory, and I'm currently managing the audit and advisory practice at a mid-sized firm up in Markham. I specialize in assisting small to medium-sized businesses with their audits and tax compliance, as well as I work with their leadership teams to realize their potential in the Canadian economy. I take a special interest in working for not-for-profit organizations and charities with their financial reporting needs and their governance, and as well as operational and growth strategies. So that was a quick introduction about our panelists. Shabir Uncle, Shafi Uncle, would you like to add anything as part of your introduction?
Assalamu alaikum wa rahmatullahi. Thank you everybody, Bayo, Beno, Bachao, for taking the time and coming forward. This will be, inshallah, this will be very interesting and beneficial to you all. Amen.
Shafi Uncle, Shabir Uncle, would you like to add anything to your intro?
Voice Unaja.
Okay. All right, so we'll just jump right into it. Just to give a brief introduction, we'll start quickly with the Canadian taxation rates. And again, before we actually get into the program, I'd like to give a disclaimer that all the information we're sharing is relating to the Canadian tax system. Specifically, most of it relates to the province of Ontario. So please keep in mind that's the advice that our panelists are going to be sharing, inshallah. So jumping right into it, just to briefly touch on the Canadian tax rates. So we know they're broken down into federal and provincial. So your federal tax rates typically start, you have your 48,000 or less, you're paying 15% on the federal side, about 44,000 on the provincial, you're paying about 5%. In total, your basic tax income tax that you're paying is in and around your 20.5%. And then there's incrementals that go up. And then as your taxable income goes up, your tax rates obviously increase and you're paying more taxes. As you can see, the rates are going, your federal is going up by about 5% for every tax bracket that you move up by. And similarly, your provincial tax rates are going up by at least between 3 to 4% for the first couple of categories. And then afterwards, over 115,000, you can see there isn't too much of a difference. So those are just the tax rates. Going into filing and payment deadlines. As we all know, our filing deadlines on your personal taxes, April 30th, is when you have to file your tax returns if you are employed. And that is because if you have any taxes owing, you would be charged penalties and interests if you are not making those payments by April 30th. If you are an individual who is self-employed, then you have up to June 15th to file your taxes. There has been a small change for 2020. So for anybody who meets the following criteria, so your 2020 taxable income is less than 75,000, you've received some of the COVID-19 benefits in 2020 from the government, and you filed your 2020 tax returns by April 30th, you will be exempted from paying any interests for your 2020 tax returns. But again, you have to meet the criteria before you are eligible for any of these to reap the benefits of the interest relief. Moving on, I am going to now request Shafi Uncle to quickly share with us the purpose of a tax system in Canada. So Shafi Uncle, if I can just move it over to you.
Assalamu alaikum. Everybody can hear clearly? You're good? Okay. Picking up from where Zara left off, there are 4 basic types of tax. One is the income tax on your personal income. Then there is the corporation tax. Then there is the property tax that is charged at the municipal level if you own a home. And then there is the HST. So those are the different categories. But when you file your personal tax, there is the federal and the provincial element therein. HST comes in differently when you have a business, and corporation tax when you are incorporated. Moving on from that, let's look at what is the overall purpose for the taxation system. It can be categorized into 4 broad categories. One is finance the national programs at the federal and provincial level. Second is the social programs. Third is economic directions and the government structure in Canada. Sorry, it's 3 main categories. Within the, as I said, the government structure is at the federal, provincial, and municipal level. What are the what is the finance of the national programs? That is the defense, immigration, infrastructure, and security. The social programs are welfare, healthcare, personal financial planning, education. And then economic directions, the incentives to business, incentive to specific geographic locations. I will zero in on a couple of things given the last 12 months environment that we are living in. We have seen the Canadian government, both at the federal and the provincial level, immediately coming out with the CERB $2,000 and other benefits costing trillions of dollars. Government doesn't have any revenue stream of its own. Now, all these programs have put the government at the federal, provincial, and the municipal level in debt. But they have come up with the programs and to funding to keep the people alive, economically keep going. At the same time, as you may have seen, there are other programs that the businesses are getting. Then at the provincial level, there is the Ontario grant that is recently just in the process of being closed. They started at 20,000 and they topped it up at 40,000. So these are all interconnected at the business level and at the personal level to keep the people employed and encouraging the businesses to keep the people employed at the same time. So you can see that now as things are evolving, there is no distinct demarcation line between those 3 or 4 broad categories. How are we doing for time, Zara?
We should be wrapping up that section now, and then inshallah we can move on to the next one.
The other piece I will, and I'll expand it later, is the social programs I mentioned on personal financial planning. That is very important. And I will touch on it later on in the main areas of RRSP and other areas. Okay, so I leave it at that and moving on. Zara?
Perfect. Jazakallah, Shafi uncle, for explaining where all the taxes that we pay and what the government does with our tax dollars. And you know, as accountants and even regular people, we're constantly questioning ourselves, why am I paying so much tax? Because some of us, you know, are paying a little over 50% in taxes. So as you know, now this is what happens with our tax money. And it's not just one program, there's multiple different programs, you know, that the government has to be able to sustain its residents and citizens. So our program for today, we've done a brief introduction. We'll now move into a panel discussion between Shafi uncle, and myself. And we'll you know, keep keep the discussion going. If anybody has any questions, or our WhatsApp group is open, feel free to leave your questions in there. You can also message us directly here on Zoom, and we'll pick up the questions and we'll answer them. The idea is to first focus on any new changes in the tax system that have come up as a result of COVID, and things that we should be keeping a lookout for as we're filing our tax returns for 2020. So I'll start off with Shabir Uncle. Maybe you can give us a bit of insight into what is this all about, the work from home, and I can claim, some sort of a credit for spending all the time that I did using my internet at home, using my personal cell phone, using, all my resources at home to be able to work from home. How is that? How can I claim that on my personal taxes this year? Sorry, Shabir Uncle, you're muted.
Is that good?
Yes.
Yeah. So, Assalamu alaikum wa rahmatullahi wa barakatuh once again. Jete Shafiba ne Panjazara Chayvia, right, about what has happened and the purpose of the tax system, right? The government has no stream of revenue except, relying on its citizens, right, to fill its coffers to provide the relevant services. 2020 was a totally unique year, right? It has changed lives of everybody, but to make sure that, Canadians remain strong, healthy, economically and socially, right? The Canadian government has come up with various schemes to help the individuals and businesses. Now, you all know there are so many people, right? Millions who have applied for these these benefits, SUB and CRB. Some of them were not entitled yet. They have received it. What will happen to them? We don't know as yet. But the CRA, the Canada Revenue Agency, has issued with all these recipients with the T4A. Now the T4A will tell you how much income you made, and with with the CRB, there was a withholding tax of $100 for every payment for every payment that was made. So of course, this will be now deductible from your overall tax. Now, the most important thing, right, about this COVID was because people were not going to work, right? Before people are unable to work, so the government has given further incentive. Kasam will get back to your question, okay? Thanks for the question, we'll get back to it. The government has said, you know what, okay, if you people have worked from home, right, then you are entitled to a certain credit, okay? So there are two methods. First is the flat rate method, okay, where you claim $2 a day for a maximum of 200 days, so $400, and that reduces your taxable pay. However, for that, there is got to be the eligibility criteria, all right? And the first one is that you worked from home in 2020 due to this COVID pandemic. You worked more than 50% of the time from home for a period of at least 4 consecutive weeks. You are only claiming home office expenses and not claiming other employment expenses. There's this because there's also other employment expenses on line 22,900 of your T1 tax return. And your employer did not reimburse you for all your home office expenses. Now, there's a question. What if your employer has reimbursed you for some of your home office expenses? You can still use the temporary flat rate method if you meet the eligibility criteria. So if your employer has reimbursed you for some of the expenses, then you can choose to go for the the flat rate method. It's a one-time thing, right? Claim $2 a day for the number of days you work from home. The other one is, it's more detailed. That's called Form 777S. 77S, and again, for one to claim this, the detailed method. Now, the detailed method is that you are claiming expense by expense. All right, you are claiming expense by expense. Now, the criteria is that you work from home in 2020 due to COVID, or you are required by your employer to work from home, right? And if you are required to work from home in 2020 by your employer, it doesn't have to be part of your employment contract, and it may be written or verbal. So the CRA will not be very, very particular and strict about this. Number two, you were required to pay for some of the expenses that related to the workspace in your home. So for example, you can claim utilities, you can claim home internet access fees, maintenance and minor repairs that relate to workspace, as well as other areas of the home. For example, repair to home furnace or air conditioner, or purchase of household cleanings. Now, that does not mean you claim repairs. You do repairs to your bathroom or your kitchen, and you can claim that. No, that's not allowed. Okay. You can, if you have paid the rent, you can even claim part of that rent for the dwellings. Now, again, the question is, what if your employer has reimbursed you for some of your home office expenses? You can still use the detailed method if you meet eligibility criteria, right? But other expenses that you will or will be reimbursed by your employer, no, you cannot claim those. Now, some of you might have been working from home in the past for whatever reason. You may have been claiming these home office expenses. This time you got to be careful what line you are claiming on, how much you are claiming on, and what's the exact amount, what's the exact expense that you are claiming. Because with the detailed method, the CR is going to come after you. It's highly likely, and do an audit. So unless and until.
So basically, Shabir uncle, you're saying get an accountant to help you with this.
Yes, come to Zara,
Yeah.
come to Shafiwa,
No.
or come to Shabir.
Yes, exactly.
It's very important. It's very important, right? That in these times, right? Not only in these times, we are living in a country which is run on professional basis.
Yep, absolutely.
Right, and it's very important that your finances, especially, are taken care of by qualified and trained, experienced professionals.
For sure.
Yeah.
Yeah,
So,
and it's so that was really good, Shabir uncle. Like I mean, gives, there's multiple ways and people can claim their home office, right? Like it's been an unusual year for all of us. So then there's another thing that comes out of this whole COVID thing is some people received CERB, some people received CRB, EI, and Shafi uncle, feel free, to jump in. What is the difference between, how to claim your EI versus your CERB on your personal tax returns? How do people deal with that?
Yeah, Jazakallah.
okay.
Somebody else is connected. Shabir, you wanted to tie up something?
Yeah, okay. CERB initially came in, when this whole thing started, right?
Mhm.
So people were just what you call, making the applications, and, the CRA was just giving out the money. However, right, those people who were laid off or were unable to continue because of they were employed and they were unable to continue, they were actually entitled to claim EI. Now, these are the people who are employed at arm's length, right? To make sure that, businesses don't, lay off people, the government also introduced this Canada Emergency Wage Subsidy, right? Okay. And it was providing subsidy up to 75% or $647 or $700, something like that per maximum. Now, those people who were entitled to EI, they will go EI, but otherwise those who were even the employees who are employed at non-arm's length, for example, your relative, right? On the CERB, they all got EI. But when the CRB came from September 27th, right, all those people who were only the employees employed at arm's length were now entitled to EI, to claim EI. The rest were all supposed to claim CRB. Again, there were conditions, right? A list of 15, 20 conditions, which were all supposed to be what you call, applied, right? Or what you call applicable. Not a single one should be missed out. So this is what it was. So again, CRB, people just got it. Then CRB, the government was more specific, right? Only those people who could not claim EI would now be entitled to CRB.
Perfect. Shafi uncle, do you want to add something on it?
Yeah, just pick up on where you will see the numbers on the T4A. So everybody make sure if you have claimed either CERB or CRB as of December 2020, I should get a T4A. Now, if you haven't for whatever reason received it, and also in generally make sure you have your own My CRA account. There you will get a lot of information and you can access the information that is there relating to you on your account with CRA. On the specific, on the T4A, the CRB was for 6 months or 7 months, and maximum anybody can get between April and September is $14,000. And that would be reported on line 197. The confusion that I've seen in the past few weeks with clients who have come in with their documents is they see an amount on line 202 and line 022. The way the CRB program is set is from beginning of October, there's October, November, December, 3 months. On a 2-week cycle, the total monthly is 2,000, but you don't get it, there's a 10% withholding tax. On the CERB, they just gave the 2,000 and there was no withholding tax. So the withholding tax is shown in the income tax deducted in line 22, and 202 is the total amount, maximum of $6,000. So these are the 3 boxes. When you put it on your tax return, it will come plus and minus. And because I've seen people saying that, there is 6,000, but I did not get 6,000. Now, on the other side is the number of people, because the CRB is broken down, as Shabir touched on it, is based on different criteria. Eligibility is not broad. Some have missed out, and it is still continuing. Now, you have to apply on every 2 weeks. And there is within 60 days or so, correct me, Shabir, that you have to apply. If you do not apply it, you miss the previous period.
Yeah, you lose out.
Yeah, lose out. Now, the information is very clear, very well presented. If you go to the CRA website, look at it. You can even ask the help desk, and they will be very helpful. Generally, people are a bit nervous about talking to CRA and all that. Nothing to worry about. Whenever you call CRA, there is no recording that you have given them information, or there is some scheme to hit you or something. There's nothing like that. They are very, very helpful. At times you have to wait on the line. Usually if you are around 8 o'clock or 9 o'clock in the morning, you will be able to get them within 15-20 minutes. On that note, I think within the context of SERB I've touched on. Now, the EI point that Shabir touched on. The EI program, and this is particular for those who are delivering, and it is extended, has been expanded on it. Say you have somebody and factoring in the arm's length and non-arm's length element that Shabir touched on. But the point I want to zero in on is, say you have a delivery, the mother can get a maternal, if they are employed, they apply for EI quickly and say their EI is $1,000 based on their income. That amount will be topped up to get to the maximum of CRB. So just to not re-emphasize, please, those who have been doing their taxes straightforward and it has been a normal thing, this is the time to reassess and get proper advice. I've seen many cases, they've just missed out on the CRB.
Yeah.
Okay.
And
But
then,
the program is still there. Look at it and apply for it.
yeah.
In fact, if I would like to add here that there are so many people, right, who are eligible
Yep.
and they have not applied.
Mhm.
Now, just in case, right, if you are even beyond if you have gone beyond 60 days, you can still call the CRA and tell them that this is the reason why you are not able to call, and they might consider your backdated applications.
Yeah. No, these are very, very insightful. One other thing that we usually used to get comments from, and this was during the 2020, I had a lot of, clients and stuff reaching out saying, what do I do with my CERB? Because is it after tax? Is it before tax money am I getting? What's the difference? And so we used to tell anybody receiving CRB or CERB, make sure you're putting aside at least 15 to 20% of that money, because that amount is taxable. What you're getting from the government, you will be taxed on that amount. It's not free money. There's a tax to be paid after, right? Whereas EI comes in after tax. So you're not really too concerned when you get the EI funding. So that was one of the big things that people didn't realize. And now, you have a tax liability. Good thing that now you have that extension up to 2022, as long as you file your tax returns by April 30th.
Now, if I would like to add here something, Zara.
Yeah, absolutely.
Yeah. Again, if you have received CERB and your income before tax is more than $38,000, right? You'll be required to pay 50 cents for every extra dollar that you got.
Mm.
Right?
Yeah.
Now, you don't want to do that, right? So how do you go about not paying, right? Consult a qualified, experienced and trained accountant and he'll show you.
Alhamdulillah, we have a lot of those. Shabir uncle and Shafi uncle come with a lot of tax experience. So feel free.
That's very important. $38,000, anything above that, right? You'll be required to pay 50 cents back for every dollar extra that you got.
Perfect. Okay. So relating to COVID, Shabir uncle, Shafi uncle, anything we need to touch on before we move on to the next segment? We were going to get into some tax planning. So maybe we can wrap up the COVID section before we get into our brief Q&A.
Yeah, I will just tie it in with a one-liner.
Yeah.
It's too complex. There are too many programs. There is a lot of misinformation and misinformation, to the point that even CRA's communications, particularly in the area for self-employed, has been very complex and misleading. And okay, so those who are self-employed does not mean that you are fully have your own business on a full-time basis. Even on a part-time basis, if you are declaring anything that you have been declaring anything on your personal tax return, look at the benefits and look at the criteria properly, so that you don't have the clawbacks or the penalties or get into unnecessary complications, as Shabir zeroed in earlier on. I think we can close that topic there.
Okay. Excellent. So that was all the changes for COVID. Again, as we've discussed, there's a lot of detail that's gone into it. So please make sure you do your research. You don't want to get into a situation where you have to pay penalties and interest. Yeah, sorry, Shabir uncle, go ahead.
Zara, I have received a question from Panja Mohammad Ba.
Yeah,
right?
so Shabir uncle, if we can, we have a few questions that have come in.
Okay.
We can take those up, right? So we'll take, before we move on to our the next segment where we're going to do some tax planning. We've got some questions from everybody on WhatsApp, on our Zoom. So we'll just quickly take up those questions. So the first one we had from Qasim uncle, which he asks, if you have paid professional dues and you are reimbursed by your company, can you claim this amount on your personal tax returns?
No.
Perfect. Yeah. So this gets into the sort of double dipping situation where
Yes.
that's not something that's coming out of your pocket. Whereas on the other hand, if your employer had not reimbursed you for it, then you would have to pay, you could get a deduction for it.
And I
right?
think this will become a benefit which will be shown in box 40, although it will have been added in box 16, right? Of your income of your T4.
Mhm.
Box 14, sorry, box 14 of your income
Mhm.
in T4, it will be there, but it will be shown in box 40 as a benefit.
Okay.
Okay, I'd like to add on something that has happened a couple of years ago, particularly, and interesting, good that Kasamba, you raised that point. And for the benefit of everybody, what is the point about this, the question? You are an individual, like Kasamba is a professional accountant, he has to pay professional dues. Lawyers have to do that. Now he is in employment. Now, as part of the employment, he has to have the designation. And the fees or designation, the association fees could run about $1,000 or so. So the employer says, okay, they will reimburse you. Now, 2 points to note. As Shabir has said, the amount will be shown on box 400.
40.
40. Now, if for whatever reason on your own personal tax return, you get the receipt from your association and you put it into the or your own professional deductions amount, the tax department have got no way of knowing that you are doing a double dip. So it will go through. And a couple of years ago, they went in and looked at audit of professional fees. And going by recollection, there was some detailed questions to demonstrate how the fees that you are claiming on your personal tax return are relevant and appropriate for your employment. And they were requiring, more critical is they were requiring a letter from your employer. So that could really have a problem for you from your employment side, should you be audited on this particular point. Because the employer will not take it lightly and will not give you a letter saying, yes, you paid it, and knowing very well that you got reimbursed. So you zero in very carefully. And more of our professionals are coming out and getting into the workforce. This could become a pretty good, important issue for them.
Mhm. Okay. Well, Jazakallah for that question, Qasim Uncle. That I'm sure it answered a lot of different people's questions as well. So on our WhatsApp group, we have a question relating to professional fees for a service for jobs done. Is the employer liable to issue a T4A slip? And Shafi Uncle, do you want to touch on that? You did answer the question on WhatsApp. But we'll let you answer that.
Let's expand.
Sorry, Zara, I'm not very clear about this question.
I understand the question. I can explain it.
Yeah.
Say you are working as a consultant, not a corporation, but self-employed, and you are doing different services, and you get $5,000. And I'm going a bit slowly on it because this is a very important question. Now, the employer who has hired you has paid you $5,000. So on his return, the $5,000 is an expense. Now, if they pay you a check, and that's another piece that misses, whether this payment is by check or cash, that's a method of payment. People miss that if they are paid by cash, can get away from the tax reporting. No, they can't. Now, the question is, the person who is receiving the $5,000, what is the guarantee and what is the backup or the process for him to file the tax return? So the emphasis and CRA is becoming more and more critical on that the employer should give a T4A as a fee for service. The copy of that will go to CRA as part of the T4A annual reporting, and the individual receiving it should report the T4A fee for service on the tax return, and they can appropriately claim expenses as well. So, okay, so don't miss out on that. That's on the directly on the question of professional fees. In my answer, I also added on that if there is, because this program is going to be up, open and on the air, I also expanded the response to say that construction workers, somebody in the construction industry, particularly when an individual filing a construction company, it says on the tax return, did you have contractors, yes or no? The point is that any construction worker that had been subcontracted to individuals, they are required to give them what they call a T5018. Now, I'll leave it at that because now we're getting a little more deep. But
Yeah.
round it off that there is also the HST element if the fee or amount you are receiving crosses the 30,000 line. Okay, but I leave it at that, otherwise it'll get too complicated.
Yeah, no, that's actually excellent, because when you're doing professional, you're earning professional fees outside of a T4, you need a lot of tax planning relating to your HSTs, how you're going to do your, whether you're going to set up a professional corporation, how you're going to set it up federally, provincially. So there's a lot of planning that goes into it. So you bring a very valid point, Shafi uncle. Again,
And also I'd like to add here, right?
Yeah.
When you are self-employed, you should be knowing what kind of expenses you can claim and to what extent.
Yeah.
Right now, here it's very important that most of the people, right, who are self-employed, or rather all self-employed individuals are required to maintain a motor vehicle logbook, right?
Yes.
Where they have to indicate on a regular basis the details of the mileage.
Right.
Right. And then at the end of the year, right, based on that, then they'll be able to claim the motor vehicle expense.
Right. Yep. No, that's there's a lot of other different things where you should consider as a self-employed individual to see whether you're allowed to deduct them or not. Another question that came up was property tax is claimable at what age?
I think Shabir
Can I answer that?
Yes, absolutely.
Shabir,
Yeah. Okay. I was going to cover this under my what you call
yeah,
deductions
exactly. Yeah. Go for it.
So why don't you do this when I'm discussing the non-refundable tax credits and deductions? I can address this question at that time.
Sure, we can. Shabir uncle, actually, because we're running short of time, I don't know if we're going to get to that section. Maybe we can just quickly answer this one, if that's okay with you.
Yeah.
Yeah.
Yes.
Let's just quickly take it up.
Yes. Now, property tax, right? You can claim it, right? From the age of 64, I suppose, right, and above, right? And there's also what you call Ontario Energy Property Tax Credit, and there's this other credit as well, right? So if you check this form ONBEN, right, which is Ontario Trillium Benefits. Here, remember one thing, right? All individuals, regardless of their what you call where they stay, right? If they are in a low or middle income, then they can make an application for this ONBEN. Now you might have 10 people staying under the same roof, all right? And although one person is paying for the rent or the property tax, the rest of the individuals can still make an application for the rebate of this Ontario Trillium benefit. Okay, now it's not that, if the property tax paid for the year was $5,000, so it's going to be shared. No, the CRA has its own formula of calculating how much benefit you'd be entitled to depending on your income. So all individuals with low or middle income, right, are eligible to apply for this benefit.
Okay, excellent. Another question that we have, and this is anonymous that came in, it says, I bought a property 5 years ago, only under my name. I claimed the first-time home buyer's credit. I sold that and bought another one in December 2020, but under mine and my wife's name this time. Can my wife claim a first-time home buyer's credit?
Yes, she can.
Perfect. Yep. First-time home buyer's credit is up to $4,000. So
Now, very important when it comes to sale of principal residence. Even there is no capital gains tax on the sale of principal residence. You have to declare on your T1 tax return on form T2091 that you sold this property during the year. This was the cost. These are what you call outlays, right? And these are the proceeds. So these are the net capital gains which you made. They will not be subject to tax, but you have to declare it. If you do not declare that, the CRA will come after you and say that you made capital gains tax. Because what used to happen is in the past, people would not declare it and they would say, you know what, you never told us that I'm supposed to declare.
yeah.
So make sure when you sell the property, principal residence, you declare it.
And if I'm understanding this correctly, Shabir Uncle, I think this is now a requirement, compulsory requirement starting 2019, right? For you to declare, there's actually a section in your tax return that you have to declare.
Yes. Okay. Otherwise, the CRA will come after you.
Yes, right. Okay. Principal residence, again, is a very interesting area, but in the interest of time, we won't get into too much details of it. And one more question that we have, and this is more so, Shabir Uncle, if you don't mind just touching on this again. It says, sorry, I might have missed this, but would you recommend to file a detailed work from home claim or take the $400?
Consult your qualified accountant and he'll tell you.
Perfect answer. Yeah.
Right?
Perfect.
You might think $400, or I'll tell you, all right? This is Zara, earlier this afternoon, I was talking to you about this, remember?
That's right. Yeah.
A client of mine came to me in the previous years. He has been, claiming thousands of dollars in home office expenses. This year, he told me that, I should apply what you call use a flat rate method. So when I did that, he ended up in a tax payable position. And he said, how am I, in the previous years, I never paid tax. How come I'm being made to pay tax now? I said, look, in the previous years, you used to claim home office expenses, right? Which we used to run in about $10,000 or $11,000. This year, only claiming $400.
Right.
So it all depends. It's worthwhile. Give your accountant a little bit more money, let him do the calculations and advise you.
Yeah, absolutely. All right, so I think we're paused for questions now. Maybe we do have about 12 minutes. If you guys are okay with it, are we okay if we go over? You guys are comfortable with that?
Yep.
Yeah, we're okay.
Zara, I have one thing very quickly I would like to mention, sure. Right?
Yeah.
And this is regarding, education credits and medical bills.
Right.
In 2019, right, the Canadian government introduced the Canada Training Credit.
Yep.
Now, this was $250. It's a refundable credit. You get the $250 back. It's not like it's a non-refundable credit. It's a non-refundable credit. It is a refundable credit, right? So from the ages of 26 to 66, if you study, then over these 40 years or so, you can claim a maximum of $5,000. The criteria is that you should have been a resident of Canada from January 1st to December 31st. Number two, you should be between the ages of 26 and 66. And your previous years, starting from 2019, the notice of assessment must say that you are eligible to claim this amount.
Okay.
So this, over and above the tuition and education credit, you will get this additional $250.
So I'm assuming then you need a T2200 from your institution to support that expense?
If you're what you call studied, you are naturally going to get that.
Yeah.
Right. And it's going to go to the CRA anyway.
Right.
So you show that on your return, but you also show this, claim this $250.
Absolutely. And
But
and that's a
remember,
good one, right? Yeah.
remember, only if you are between 26 and 66.
Yeah, well, this is, this is good for all the people who are not in university and who are doing, yeah. And I have a question on this, Shabir Uncle. Does it have to relate to your profession, or it could be any other any courses that you
Any
take?
courses, any courses, any
Yep.
courses, right?
That's excellent.
Okay, regarding medical bills, right? Many people are under the impression that, if the medical bills are not claimed in 1 year, right, then they cannot be claimed in the following year, or they cannot be carried forward. Yes, medical bills cannot be carried forward. But for example, if you have incurred medical bills from February 2019 to December 2019, and for some reason you are not able to claim all of that between February 2019 and December 2019, if you are not able to claim all these medical bills in your tax return for 2020 or 2019, you can carry them forward to 2020 and claim them there.
Okay. And how are the medical bills then? If you have, there's a husband and a wife, they're filing their tax returns together, how can they split the medical bills? Who gets the right to declare them on their tax return?
It would be advisable, again, let me add here, consult your accountant.
Okay, that's good.
Right?
Yeah.
It's usually the spouse with the higher income, right, should be claiming it.
That's right.
Now, remember, if the situation is such that the spouse who is claiming on whom the medical bills have been incurred, you can also claim travel expenses relating to this expense.
Right.
So you took your spouse to the doctor, you can claim that mileage.
I see. Okay. Perfect. Since we're already talking about non-refundable tax credits and deductions, I think the one that we haven't touched on too, actually, is donations and disability credit. You want to give us a bit of insight into that?
Yeah. Donations, right? Again, this can be, there's what you can only claim up to a maximum of 75% of your net income, right? And there's a formula for that. And you can claim them over a period of 5 years. If you don't claim within those 5 years, then you lose that credit. And you can transfer between either of the spouse can claim it. But you can only claim those donations that have been made to a registered charitable organization that gives you a receipt. Now, even if you have given zakat, right? For example, if you give your zakat to what you call Islamic Society of Toronto, right? Markham, whatever it is, right? You have given your zakat there. If they issue you with the tax receipt, yes, you can claim that. And I would recommend, yeah, why not? Even if it's a zakat, why not? Get the refund and give it back.
Right. Yep. What about disability credit?
Disability, right. Again, now disability, there are two things, right, on disability. Sometimes a person may not be able to work, right? He can move, but he's unable to work. So the CPP will give him that disability. He'll receive from Service Canada a CPP benefit, CPP disability benefit. That's his income, but he cannot claim a disability tax credit on that. He cannot claim a disability tax credit on that. To claim a disability tax credit, you must have a doctor's certificate to say that you are totally debilitated and you cannot move. You are unable to lead a normal life. That certificate has to go to the Canada Revenue Agency. The Canada Revenue Agency will go through it, seek its opinion, seek a second opinion from its own consultant doctors. And then once they allow that, yes, you can claim this credit, then you can do so. And remember, they will tell you that this disability tax credit is available for so many years.
Right.
Remember, after the expiry of that period, you got to reapply for it.
Right. Yeah. So check your notice of assessment. That should give you all of your information. If you're not
Yes.
sure, call the CRA. They should be able to give you information using your social insurance number.
Right.
I want to add
Okay.
something,
Yes.
Sarah. I just got this a client yesterday only. When you have a disability credit, and this is the situation, the client came in, they were getting the disability credit, but the condition has gone a little worse, and we're asking about the long-term credit.
Mhm.
Now that is linked to your CPP, and if you have been paying CPP and there is an element of long-term disability, contact the CPP and they will tell you what to, how to apply for that.
Right.
Okay. All right. Can you excuse me for a moment?
Yeah.
Zara, I think we have a question here from, I believe it's Jamila,
Yes.
right?
Yeah. Do you want to take that up, Shabir uncle?
Well, it says, as professional accountants, are they mandated to withhold the privacy and personal information? Yes, like Shafiba said, absolutely.
Yeah.
Absolutely, we are bound by that.
Mm-hmm.
Now, I don't understand a second question when it says, how about the accountants who are filing the taxes?
I think she was talking about the accountants. I think Shafi uncle understood it as CRA. But both CRA and your accountant are required to hold up your privacy. Like the CRA will never give you any information if you don't have the number handy, right? Where your accountant will make you sign an engagement letter saying that they themselves are not going to release any of your information.
In fact, right now, during this time of COVID pandemic, if you call the CRA, the staff are working from their own homes. And the answering system, the CRA answering system will tell you that this telephone call may be intercepted.
Yeah.
Right? Okay. And your privacy may be compromised with. Privacy of your information may be compromised with. Yeah. So that means CRA, both the CRA and the accountants are bound by this what you call Privacy Act. In fact, if you can remember about 5-6 years ago, the CRA system was hacked and some social insurance numbers were stolen from there.
That's right.
Right. Yeah. And then the CRA, was working on that and said, you know what? We are now giving you a 1 month's extension to file your tax returns.
That's right. That's right. Yeah, I do remember this a couple of years ago.
So I hope that satisfactorily answers Jamila's question.
Yeah, I mean, in times of technology, sometimes it's beyond the control of the organization.
It's a double-edged sword.
As well, right? So as much as technology is on our side, it also works against us. So it is what it is. Okay, so I think we're done with the questions, Shabir uncle. I know we don't have too much time, but we were going to touch on some of the RSP and TFSA planning. So if you're okay, I did get a question about TFSA. I'm just going to quickly answer that if that works, right?
Sure.
I think with TFSA, which is just quickly to explain this is a tax-free savings account. How this is different from the RSP is that your RSP allows you to deduct that from your tax return. It's basically a tax deferral method, whereas your TFSA, you pay tax at your current tax rate. However, any income that you earn on your TFSA account, you are not taxed on it. It's tax-free. So for example, let's say you invested in a stock and you bought the stock for $5,000 in January of 2020. By December 2020, that stock is now sitting at $10,000. You are not required to pay any tax on that investment income between $5,000 and $10,000, which is $5,000. That's typically how your TFSA works. Another question that was what happens if I over contribute to my TFSA? So TFSA has an annual contribution room that changes year to year. The most recent one is $6,000 for the 2019-2020 year end. So your contribution is limited to that. If you over contribute, you have to pay the excess amount is subject to 1% per month until you remove it from your TFSA account. But however, as your TFSA is growing, that doesn't mean that the growth of your TFSA, it reduces your contribution limit. That's all it is. I know Shafi uncle was supposed to touch quickly on the RSP. Shafi uncle, do you want to quickly touch on that?
Yeah.
Oh, sorry, Shafi uncle here. Oh, perfect. Do you want to switch on your video, Shafi uncle?
Zara, can I quickly add something about the over contributions?
Yeah, absolutely.
On the TFSA. right? If you over contributed by more than 15%, right, then there's a 1% interest penalty by the CRA every month.
That's right. Yeah.
Number one. Number two, if your account has grown, if the money, if your savings have grown to 10,000 from $5,000, it will depend. If you have been actively trading, selling and buying and selling, right, then that might come under CRA scrutiny.
Yes, as long as it doesn't compromise your contribution limit. Absolutely, you're right.
Right?
Yeah.
Okay, because then the CRA will, the CRA will look at it differently, and
Yeah.
right? So that might come under scrutiny.
Yeah, definitely. Right?
Let me expand a little bit on that. One thing, say your contribution limit is $6,000 and you have not contributed the maximum, the difference is carried forward. That's one thing. And the point that Shabir is touched on and Zara is touched on your trading. Obviously, you put the money in and you want to invest, and you will need to trade, and you will. This is an investment vehicle, and tax planning is legal. Tax evasion is illegal.
That's right.
Now, this is a classic case as where do you draw the line? What are the parameters? And I'll expand on that and before I get into the RRSP because there's a connection. You have traded and you have to trade obviously. Now, when you trade, you were to get a T5 slip or a T3 slip or what other slips there are, and 50818 that the financial institution is obliged to give you. Now, a copy of that will go to CRA. A couple of things that I've seen, and that is not to do with whether it is a TFS account or any outside TFSI trading. The institutions are not providing accurate information in some of these slip as on the cost amount. I've seen T5018, so is that the market value, the sale amount is given, but the cost is not given. That is more because is that they are not provided with the cost information, and you have sold after a few years. And this just sort of adds on that when you are getting into these areas, proper planning is very critical because then at the tail end, you will lose out.
Yeah.
Now let's move into the RRSP side. And along the way, we have touched on, and Shabir has talked quite a bit on the credits. What is the difference between credits and
Deductions?
Okay, so those that are there, just and if you have a piece of paper, I'll give you, if nothing else, just take this information. Now, write down, if you have it, your income is $100,000 and you contribute $10,000 in an RRSP. That leaves you with $90,000. So your tax is going to be calculated on $90,000. Okay. Now, you have got an employment income of $100,000, and through your employment and withholding tax and everything on that line tax deducted, will get say $20,000 of tax deducted. Now you have got normal exemptions of about $11,000 that you get. Shabir has touched on a number of credits like the disability credit, the tuition credit, and etc. Picking on the tuition credit, your child was in university, you got the T2202, link it to yours, and from the child's T22 of whatever $20,000, 5,000 maximum can be transferred to you. That is a credit. Now, based on all your credits, a percentage will be worked out and converting that into the dollar amount at the federal level and the provincial level. So that is going to be offset against the tax that you have paid. Please, if you do not understand or not clear on the dividends, or sorry, not the credits and the deductions, look at it, research it, and get proper advice. Because if you are moving into a tax planning and taking maximum benefit of the tax planning vehicles that are there and the incentives that are provided, it is very important. As we have constantly seen over the years, and COVID is another thing, CRA is providing direct dollar for dollar credits like the $400 child tax benefit is a separate thing. The disability credit, all these are credits. Now the other credit is on the low income, and as you go down in your tax deductions, there is a line low income credit. Those that are in employment or self-employment, not studying, they and their income is say $20,000-$30,000 below the threshold, so you get that credit. But if you are a student and claiming the tuition credit, you don't get that because that's related to your work. So CRA is finding different areas and methods to provide credits to individuals, particularly where the income level is around under the 30,000-40,000 bracket. Now, in 2 minutes, I will touch on the most complicated area of the whole thing is the whole area of RRSP. RRSP, RESP, and the RRIF. I won't get into the RIF, but RRSP and RESP. In principle, said that it is a deduction you can carry forward. That is an excellent vehicle for your tax planning, retirement planning. The argument that I always get is, well, when I withdraw, I have to pay tax. So I have to go through the whole thought process. I said, it is not a savings account. It is a retirement planning account. So that when you put in every year that you have allowed, you contribute, you have a proper investment vehicles and plan to grow, that amount can grow quite exponentially. Now, when you get to the age of 71, you can then start withdrawing through the vehicle called RRIF, Registered Retirement Income Fund. And then based on whatever you get, at that time, you will not have any income. So whatever the amount is, it gets into your tax amount and it's taxable at the lower rate, and the amount of growth that you have seen, if you have got a proper financial plan and an investment plan, basically it has grown exponentially without having paid tax. So at the end of the term, you have to pay tax. You cannot get away from tax. But these are the vehicles that I said as the opening is the different purpose, and the structure is to provide incentives for individuals to grow and to build their wealth.
Shafi uncle, can you maybe give us a bit of insight on spousal RSP?
Yes, that's a good one. Everybody should be having a spousal RRSP. Now, when we normally psychologically think of spouse is husband and wife. In tax, it's either one. A spouse is a spouse. Husband is a spouse of the wife, and the wife is a spouse of the husband. Now the question is, who is the higher bracket? Generally, obviously, the husband has got the higher bracket, and it will continue in the higher bracket. The question then comes in at some point in time, and that you require between the husband and wife to sit down and really have an objective discussion. If both are professional, as we see now, our children are all getting into that, each have got their own careers, each have got their own schemes, as what they call career paths and thought processes. So what you do is, say you have got two, now let's take a scenario of two professionals, well qualified, everything stable, each are making $100,000. Now, between your own private discussions, we'll have to say at some point you want a family. Now, at point in having a family and raising a children, you decide that at some point, obviously the wife will reduce their hours or work from home and reduce the income so that they can continue with the home. If that is the framework, then you have a spousal plan. That is from the overall framework perspective. Now, what is a spousal plan and how is it beneficial? The contributor is the husband. Let's take that as in that framework. The husband can contribute $10,000 in the RRSP. gets the benefit on his tax return for the 10,000, but puts the money in the RRSP as a spousal. So what that happens is when the wife's income is lower at some point through their life, and her employment side is reduced because of taking care of the family, and at that time when they withdraw after the 3 years that the amounts are in the plan, the withdrawal amount comes as a taxable on the wife. So those are all interconnected elements that when you've got two professionals, each working, each on their own career, as we see now, they are going on and moving forward. Alhamdulillah, our community is getting into that. A real well thought out plan and discussion is necessary. And I will add on to that, that gets into the other part that in another sessions we have talked about, is having a will, power of attorney, both personal and property, and then getting into estate planning. Okay, so I think I will, because of time, I touched on the main part. Now, can you open up for questions that are, and then zero in on question, particularly in this area of RRSP that people will not, and we just take 3 questions at this point in the interest of time.
Yeah, so far we have no questions.
Okay.
As a woman, I want to see, inshallah, in 5 years, someone will say the man will stay home, take care of the kids, and the woman will have the higher income. Inshallah.
That is feasible.
Yeah. So we have one more question not relating to RSP. It says, why should we choose to go to an accountant where there is tax software sold in the market?
I can
answer
I can answer that.
Go for it. I think all of us should answer this one.
Yes.
We'll start with Shafi.
Shafi, can I answer that?
Sure, go ahead.
To begin with, right? If everyone were to go to, and buy a tax software, I don't think we would have had this seminar today.
Let me answer
Right?
it in a different way, but carry on, Shabir.
Right? We wouldn't have had this webinar today. All right. What I'm trying to say is that yes, if you have a very simple tax return, right? Okay, and you're looking at short-term gains, by all means, go buy a software. But if you really want to have a secured future, you want to have what you call secure your investments and your money in future, right? Then you need a qualified, trained, experienced accountant to help you reach there. The tax software will not do it, right? For example, I'll tell you, Shafi, you just mentioned about, the spousal RRSP, right? If the spouse, right, decides to act malicious and withdraws the money within the first year of the contribution, right? It's not the spouse who's going to, what you call, pay tax on that. That will be added back to the husband's or to the spouse who contributed to the plan. So, for example, like Shafi said, if the husband contributes $10,000 to the spousal RRSP, and the following year, right, for whatever reason, the wife withdraws that $10,000, that $10,000 will be treated as income of the husband, not the wife. Because you have to let it stay there for at least 3 years. Now, again, this is something which the tax software will not tell you. Shafi?
Yeah, let me, I think Shabir has answered this question. It is a very pertinent question, and it's good that somebody has taken the courage to ask the question. But now let's me respond from a broader context. We all know philosophically it says you get what you pay for. Now, yes, you can get the $30 Staples whatever program. Now take that and what are you going to do with it? And let me tell you something that I heard earlier in life. And this is a situation that happened in England. An older lady was watching TV and all of a sudden the TV going back, this is going back 30 years, black and white TVs. And didn't know what to do with it. So they called the technician. The guy came in and gave a spank on the TV in a certain area, and the TV started working. And she said, how much? He says, 100 pounds. He said, 100 pounds for just to give a spank on the machine? And he said, yeah. And he said, why? He said, because you did not know where to give the spank. I knew. The tech that it's not just while we are talking on the tech side, take this piece, because I was still given that by an elder earlier in life, in everything that you do, in every area. And never, ever, ever bargain on professional service and professional fees. All three of us are not here trying to promote our practices. Alhamdulillah, we have more than enough to keep us busy. But this is a community service. We are giving it to you. I have been invited over the years, and those of you are there that know me for well, given seminars in the Jamaat before, and I've always emphasized, and it is with regret that over the last 5 years I get calls. What about this and what about this? What happened now? I said, I have to say it is too late now.
Yeah.
So I leave it at that. I don't want to make it a sober note, but it's a reality that we have to face.
Yeah.
And today, everyone should have a lawyer and an accountant and a doctor. When you have a doctor, you keep a family doctor. You don't change doctors. That is ingrained in us. But why not have a family lawyer? Why not have a family accountant? And I'm not talking about an accountant, and I'm not talking about a bookkeeper. An accountant with expertise in financial planning, in tax planning. And we have gone through with hard, long years of training so that we are up to date and are able to provide the service. And again, in closing, we are not here to promote our practices. So take that in good faith.
If I can just make a last point on that one, I think tax filing has always been seen as a very daunting task, right? It's like, oh my God, April 30th is coming. I have to file my taxes. Am I going to owe? It's all about, well, how much money can I get back? I think it's just the perspective that needs to change, right? It's not just your tax filings that you need to do. There's a lot of planning that needs to go into it. It's, sometimes if you're not taking advantage of these RSPs, all these credits, if you go to a software that doesn't tell you, hey, doesn't prompt you for, did you deduct your medical receipts? Did you deduct your donations? If they're not prompting you, you're losing out on all this. This is all money that you're paying to the government that could be sitting in your pocket, right? So now, of course, instead of going to a professional, paying $150, $200 to get your tax returns done, you've ended up losing about $500, $600 in tax benefits that you would have had. So it's just what you get at the end of the day, a lot of planning that happens, especially now that our community is here as a second, third generation. The wealth is building here. We're no longer a community that has wealth back home, and we're just a first generation here. We are a generation that's building wealth here, and as we build that wealth, it is very important that we consult these professionals who will allow us to be able to grow this. And we grow our wealth. We're helping the children in the future. We're helping the community at large. We're helping the people that need it. We're helping people back home. There's a lot that we can do. So it's just a domino effect that it has, right? So in closing, I'm just going to first thank Shabir uncle and Shafi uncle for taking their time out. And we haven't done one of these in a very long time. So I'm really glad we took up this time. And we do hope that this was very helpful to everybody. If anybody has any more questions, please feel free to email us. You have our numbers on the WhatsApp group. You can message us directly. You can email us. We'll be as helpful as possible. But again, it's, we have our limitations as well, right? But reach out to us. Yeah, absolutely. Go ahead.
Zara, I just got a question.
Right.
It's a very, very good question from Mohammad Goralwal. Mohammad, I did respond, but it's important to share.
Yeah.
There is a lot of confusion about that. And the banks are promoting and they're hiring and have their own financial planners. Good thing that the banks over the last 10 years have designated and have paid people there to do it. and I'll make some very candid comments here, and maybe I'll get a flag in the public from banks or whatever as this thing goes public. But the reality is, one, you go to in the bank and talk to the fund. They will give you general advice. They will give you some options. They will give you the pieces. Excellent. It's a good front end thing. But look at what your goals are, and you touched on it very well, Zara. Your objective is to build wealth. RRSP is not to get, it's more than, yes, go in, put the money in, and you get the 30 to 40,000 or 40% back and in tax savings. Good. But that 10,000, where will it end in 20 years' time? The bank, yes, they will give you general, they will promote their employees there, they will promote their own products, but they are not, and I wouldn't say they are not, but their knowledge and scope of money management is limited. Now I'm using the word money management. All of us have gone through high school and education, and that where in our education system have you ever seen a subject called money? And what is money? But at the same time, we have been educated to make money. And now we are here, how do we manage money? How does it grow? And today, when you got in the US, everything that is got trillions of dollars, where is the money coming from? So I don't want to expand on that, but the question is very relevant. And with COVID and all that, and as we have said, that whole thing that everybody has seen it about Bitcoin and crypto and all that, what is happening? Knowledge is important. We have worked very hard. And I sit here at this age and I see some of our people and over across the community, they just go to the wrong people and not they get good advice. So this question is very important. Yes, go to the bank, get some advice, then link it to your own goals and objectives, and get the best advice and ongoing interaction with your professionals. And I leave it
Shafiq,
at that.
can I idea Zara quickly, please?
Yeah, absolutely.
You see, many people, right, when the tax-free savings account was introduced, many people then, and even now, right, they do not know what exactly the tax-free savings account is supposed to be and how it's supposed to operate. So what the banks have been doing, right, they tell the individual customer that, you know what, put it in a tax-free savings account and we'll give you 2% or 3%, right?
Yep.
And the customer thinks, oh, that's a deal. The customer does not realize that instead that the bank is now investing his money, which he could have done it himself, and the bank is making more money. See, the bank could have told, right? The bank will tell him, I will give you 2%, 3%, right? And they invest the money on behalf, they take the money and then invest it and they make more money.
Right.
Number two, right? The banks in many cases, right, have misled the customers into believing that yes, they can open a tax-free savings account, right, in different banks, right, of the maximum contribution limit. So a customer would go to TD, put 5,000 or 6,000 there, and he has an account with RBC or, you know, Bank of no, what you call BMO, whatever it is, right? And BMO will tell him the same thing, you can put $5,000. And then lo and behold, at the end of the year, the CRA is after them, that you over contributed by more than 15%, 1% penalty every month.
Yep.
Okay, I want to touch that. It's a very critical that Shabir has said. The tax system is a voluntary system. So now just stop and think of it. You do an e-file and within 2 weeks, you get the notice of assessment and everything. That does not mean that your tax return has gone through the regular checks and balances that we have been talking about. At that point, do not know that you are over contributed or whatever, and all the other bad. These things come out 6 months, 12 months, or 2 years later, when the whole review cycle starts. Now, those who are in self-employment, and this is what we encourage everybody, particularly our community members, those who are in employment, start something from home on a part-time basis. Use the time productively and grow. That's what our elders have done. It is important that we move out of the employment mindset to a business self-employment mindset. And that's where it connects, to know that we have our planning all properly set. And it's any advice, you may not use it immediately, but it develops your thought process when you associate yourself with professionals and have discussions of this nature, not around the dinner table, but in the office of the profession.
Absolutely. Absolutely. All right. So I think we've had a great discussion today. I think we'll wrap it up. Jazakallah Shafi Uncle, Shabir Uncle. That concludes our tax webinar session. I will now hand it over to our president, inshallah, to give us a brief.
Zara?
Yes.
Sorry, Zara.
Yes.
iPhone, I don't know about Shafi and about you, but I think, if members have further questions, yeah, sure, let them post them on this, on this group, and we'll do our best to answer them.
Absolutely. Absolutely. So we'll leave the group on for tonight. We do request, please do not share any forwards. Ask your questions. After tonight, you can reach out to us personally to ask any questions, and then we'll go from there, inshallah. Any one of us can, assist you with any of your questions, inshallah. Okay, so in the interest of time, I'm going to pass it on to the president, inshallah, and he can.
Hey, by the way, do you guys know why Donald Trump was refusing to accept the outcome of the elections?
No idea. He didn't want to pay tax.
Because he can't write off his losses in tax.
Yep.
See, this is what happens.
Exactly. That's why you need a professional. Anybody want? Okay, so pass it on to the president.
Can you give me the screen?
Auzu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. Assalatu wassalamu ala sayyidina nabiyyina Maulana Muhammadin wa ala alihi wa ashabihi ajma'in. Amma ba'd. Rabbi shrah li sadri wa yassir li amri waluqtadan min lisani yafqahu qawli. Buzurgo, bhavro, bendu ane bachao, assalamu alaikum wa rahmatullahi wa barakatuh. સૌથી પહેલા તો પાંજો રમઝાન ઇન્શાલ્લાહ મંગળવાર જે યા બુધવાર જે આવતી વીકે શરૂ થઈ ગયો आहे ને મુ તરફથી ને એક્ઝિક્યુટિવ તરફ કમિટી તરફથી આ અમેરિકા રમઝાનની મુબારકબાદ પેશ કર્યા હતું ને અલ્લાહ વટા દુઆ है કે પાંચ અમેરિકે તંદુરસ્ત રખે તાકે પા इन भले महीने जी पूरो फ़ाइदो उठाए सघूं आमीन जेको मेंबर्स आज जे प्रोग्राम में ज्वाइन थिया इन जो बहुत आभार है इन जो ने आशा है कि पाके मिली के इन प्रोग्राम में थोड़ी घनी जानकारी मिली ने अञा पण कोई पण वटे कोई सवाल हुआ तो अज जी पैनलिस्ट हुआ शफी भाई शबीर भाई ने ज़ारा इन तरह प्रोफेशनल्स हैं प्रोफेशनल अकाउंटेंट्स हैं इन्हीं के डायरेक्टली कॉन्टेक्ट कर सको या तो कोई सेक्रेटरी के अपन ईमेल हले जा तो इंशाल्लाह इन बेगा थी ना अञा सवाल जा जवाब दींदा आमीन ने जोको आज जे प्रोग्राम में जॉइन न थी सकिया ई प्रोग्राम पांजे यूट्यूब मते अवेलेबल है तो इन जडे पन वक्त मिले कि इनके नारी जा ने अञा पन कोई सवाल हुआ तो चेसियो या कि ई तरह पैनलिस्ट के एंड पूछ सको था आज की पैनलिस्ट हुआ भाई शफी भाई शबीर ने ज़ारा इन जो आभार आहियां कि ये प्रोग्राम बनायूं ने पाके थोड़ी घणी जानकारी इनमें मिली। इनफैक्ट तो चाह तो जी जानकारी मिली। इन्हीं अहिड़ा पॉइंट्स टच करी विया आहिनि जेकी पाके घणे के पहले थी ख़बर न हुई। स्पेशली जेकी TFSA आहे ई पंहिंजे में आई डोंट थिंक केतिरा बधे आहिनि जेको इन्वेस्ट करीनि था। इंशाल्लाह रमज़ान जे महीने थी पहला रमज़ान जे हेम्पर डिस्ट्रीब्यूट करींदासीं ने आशा है कि आके इन हेम्पर में आके मेरी के मजा अचींदी। बियो साथे साथे रमज़ान में पांजी जमात NMJ कैनेडा उनके साथे कोलैबोरेट करी NMJ नॉर्थ अमेरिका साथे ने प्रोग्राम पेश करींदासीं। हिंजा वधा डिटेल्स आके ईमेल में अची वेंदा इंशाल्लाह। जहिड़ी ते हर वारे करियूं था ज़कात ने सदका कलेक्ट करियूं था इंजा पना की डिटेल्स जल्दी में अची वेंदा इंशाल्लाह। ने कोई पन के इंटरेस्ट हुए तो असा के कांटेक्ट करियो हेवो थी दीनो है तो असा को कांटेक्ट करियो तो असा के ईमेल के आके हलाईंदासीं के केड़ा केड़ा डिस्ट्रीब्यूट के पैसा हलिया सगो। पाके खबर है कि अञा ही थर्ड वेव चालू थियो है ने कई वेरिएंट्स पन आइन इनमें तो पांजी ध्यान रखिजे ने जो को पांजा फ्रंट लाइन हीरोज इन लाइ करे दुआ करिजे। इन सॼो ॾींहुं ॿार हुअनि था इन के मेरी के एसिस्ट कनि था तो पानी लाइ करे दुआ करिजे कि इंशाल्लाह अल्लाह इन के महफूज में रखे आमीन। ने ॿियो आहे कि जेको जेको बीमार आहिनि ॿिया हॉस्पिटल में आहिनि ॿिया घर आहिनि इन लाइ करे दुआ करिजे कि अल्लाह इन के शिफ़ाए कामिला आजिला फरमाए आमीन। ने भाइयों पाछो भरामन करी वेंदोसीं ही थर्ड वेव आहे नवा वेरिएंट्स आहिनि तो प्लीज़ आके मौक़ो मिले तो वैक्सीनेशन करी गिनो। तो वैक्सीनेशन जो फ़ाइदो ये है कि इन केस पाके कोविड पकड़े तो वो एटलो पाके इफेक्ट न करे। हालांकि अमेरिका में मिली के जी वैक्सीनेशन दिनों इन के पन कोविड पकड़ी है पन एटलो असर नथो करे ICU में ने वञे जो नथो पए। तो इंशाल्लाह कोशिश करिजे कि वैक्सीनेशन खणी गिंजे। अने आखिर में दुआ करिजे मेरी लाइ करे रब्बना तक़ब्बल मिन्ना इन्नका अंत समीउल अलीम व तुब अलैना या मौलाना इन्नका अंत तव्वाबुर रहीम। रब्बना आतिना फिद दुनिया हसनतन व फिल आखिरति हसनतन व किना अज़ाबन नार व किना अज़ाबन कब्र अज़ाबुन अशर अज़ाबुन सकरातुल मौत अज़ाबुन मीज़ान अज़ाबुन फ़क्र बिफदली सुभान रब्बिका रब्बिल इज़्ज़ति अम्मा यसिफून व सलामुन अलल मुरसलीन वल्हम्दुलिल्लाहि रब्बिल आलमीन। जज़ाकल्लाहु व आखिरु दावाना अल्हम्दुलिल्लाहि रब्बिल आलमीन। अस्सलामु अलैकुम व रहमतुल्लाहि व बरकातुहू।
Jazakallah, President Saab. So we come to the conclusion of our program. Jazakallah, everyone, for joining. We do apologize for going overboard. It was in the interest of learning. So inshallah, we hope everybody got a learning out of it. Thank you, everyone, for attending. Thank you, Shabir Uncle, Shafi Uncle, again for giving us your time. We do understand you have busy weekends during tax season. So we do appreciate all of the learning that you were able to share with us. With that, we conclude, inshallah, and we'll keep you posted about the next program. Jazakallah. Assalamu alaikum wa rahmatullahi wa barakatuh.